Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Yeah, welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen and we have Monday, same time, same place, time for cycle analysis. Thanks for joining me. Guten Abend. I see you in the chat. We are live. So, purpose for today is we need to revisit Bitcoin. It is often requested by the community. I think in most cases I select the assets to talk about when it's time to talk about. So today, 15-20 minutes, talk about cycles in Bitcoin and where we are today. This is what you can expect. After the 15 minutes cycles update, I will pay attention to your questions if you want. Bitcoin. Where to start? We have a long history talking about cycles in Bitcoin, especially if you follow the updates I did here on Bitcoin. Therefore, we need to start, or I would recommend, if you're interested in a longer update on Bitcoin, start with the financial summit we did January this year. I think it's a good wrapper around the historical cycles in Bitcoin I provided you here a long time ago. Because there's an important rhythm in cycles within Bitcoin based on a long-term analysis. I've gone back to the early start of Bitcoin and analyzed almost all major ups and downs in Bitcoin versus US dollar. And found an interesting pattern related to cycles. I will not go into each and every detail of these patterns, so go back to January if you're interested, and I will now update you where we are in that pattern. So let's start, and let's start with that. Give me a second to bring in the charts I want to share with you. So this is the Bitcoin data as where we are today, and I will oh my, that's a little bit nicer. So this is the Bitcoin chart where we are today. I will come back to the current state in a second. Before doing that, I need to bring you into the, let's start here. This is, and you can revisit this on your own if you want. This is in July this year, so 3 to 4 months ago, I made also revisiting Bitcoin. The key I just want to outline here that first, there is a nominal cycle with a length, with a length of 200. First topic to remember. Second topic to remember, there's always the long-term count that 3 repetitions, after an important top, which is here. And then if you count 3 repetitions forward for the nominal 200-day cycle is 1, 2, 3. And with this pattern of 3 counts for the 200-day cycle, and this is where I refer back to that video, this is the point where the bear market normally has ended in Bitcoin. And that's really the interesting point here. So once we have identified the major top based on cycles, we often, or there's a recurring rhythm in Bitcoin, if we use the count, so 3 repetitions of the 200-day cycle need to be concluded in time, once the winter has ended. And that was the talk I did in January, that we could expect at the count of 3, and this is exactly where we would expect to arrive early this year. Here, so there we could start. So And I always told the period between January and May this year is the best period to position expecting an increase in Bitcoin. So that's where we said at that point in time. So finally, and then I will stop. I will bring it to the current situation. In July, that's where we have been. I told you we might need to wait until August here, that endpoint, to see the upswing here. So and by the way, in January, Bitcoin traded at 16K. I think here we have been at 30K, and now we are close to 40K. So this 200-day rhythm and the pattern of 3 worked nicely. So just set that up front. And you need to have this knowledge in mind when I bring you now to the latest state. So this was the very, very quick recap where we're coming from. Now looking at the current chart, coming back to this analysis here with the latest data of Bitcoin we have on the screen. And first and foremost, and this is why I needed to make this quick reference to the historic analysis, is if you use the past 3 years of Bitcoin data, and that's where it's get really, boring. We all know that we have this sideways move here since mid-22. So for almost a year, it was really boring to look at Bitcoin. Say it that way. We just made sideways movement. It looks like nobody was interested in Bitcoin. And now, and I always said after May, and now it looks like we are ramping up again from that level here. So that level is nothing new since July last year. So not the first time we're really pushing up here lately. So how do we judge this? And this is where we need to look today. So let's go to the spectrum here down below. And I don't like it. It's not a beautiful spectrum, to say it in simple words. It will really not help us to identify a dominant cycle. And I will tell you why. First, here in this section, we have 2 peaks. From a mathematical point of view, we can see 2 peaks, one at 150 or 55 days, and the other one at 179 days. But to be honest, this is not a spectrum peak here. These are 2 peaks, but this looks like 1 peak in the spectrum. So we cannot use one of these isolated peaks here. And then you could argue there's a second one, but this one is quite, so from the amplitude, it's quite low. So these are quite higher to the left, and we have a higher peak here to the right. So it looks like a peak, but the amplitude is too low compared to the left side and compared to the right side. And the strength, if we see on this cycle, it's 257 days, but the strength is much too low. So also, this is not a cycle I would use for any projection here. Then let's go to the smaller ones here. So this is really a mess with a lot of short-term cycles here. But again, not easy to pick one. And even if we would, these are very, very short-term cycles, which could not really be used for any useful trading. So this is now the situation when the spectrum of the current data would not help to isolate an important dominant cycle. And I just bring this in because this is very often we are confronted with a spectrum just using the current data, which might not bring us to a useful dominant cycle detection here. And therefore, we simply should not use any of the peaks here we can see in the spectrum to do any projection based on these peaks in the spectrum to see. So, and I hope by following this channel, you can follow the rules, what it means to be a valid cycle to use for projection and to be a non-valid cycle for projection. So I always repeat the same principles here on how to pick these cycles. So, but this leaves us with the question, yeah, okay, if we can't identify a cycle based on the current data, Lars, how can we use cycles to make any useful analysis in Bitcoin? And then your long-term knowledge on the cycles comes into play. I always repeat, besides the past data, so the current analysis in Bitcoin, you always should have an understanding about the historical cycles, not just taking the last 3 years into account, also the longer historical data set of Bitcoin. And this is where I did the long-term analysis referencing in January and just review past videos. And this long-term analysis always revealed a long-term cycle with 200 days. And you might argue, okay, here is one, but at least it is not enough data to really pick one of these, because these are not 2 peaks, this is 1 peak. So we have our long-term analysis. We know that there's a 200 days nominal cycle. So let's add more data so that we have more context for the cycle analysis. Let's do that now here. So I will add more data to the past so that our cycle analyzer algorithm has more data to apply the digital signal processing. So let's load more data. Yeah, you see, now we have loaded a little bit more data to the chart. And what's now important is that we pick a starting point more in the past. We will do this by adjusting the start point for the analysis. Yeah, I will now move back into, it doesn't really matter. So somewhere here into the past, I will activate now the analysis here. So you see now these 2 dots come into play. It's not perfect here. So let's add a little bit more data, maybe going back to 2019. So now you see that the cycle around 200 becomes more clearly. And this is not, I want to see that cycle. We have up to the current data. It's just because the normal flat period here would not indicate any real data. And this is why we just saw the flat breakdown. So by bringing in additional historical data and adding the current data, so it's not that we leave out the latest data, we can now identify the 200-day cycle again. And even though it's not perfect, it's better but not perfect, we know from our historical work that the nominal cycle of 200 days is valid for Bitcoin. So now let's just bring in this cycle to see where we are in that context. So by no surprise, that's exactly what the same cycle we revealed in July and January this year. And I talked about this 200-day cycle, I think 2 years ago. So it's still there. So this is with current data. We still have that nominal cycle here in the chart. And if you don't trust it, we can also add the second peak here. We see at 200, what's that, 272. And what I'm always trying to do here, if you select and deselect, you see that the shape of the projection does not really change completely. Yeah, so you see a slight change in the curve of the composite, but the projected upswing we are now in since August into end of that year will stay. So even though if we just use the single 200-day cycle or both cycles, the projection will stay. So they don't phase out each other like in noise cancelling, yeah, where if you would have 2 different opposite cycle plots, they would equal out and you would see a flat line, but they add up each other, so they confirm each other. So it doesn't really matter, so we can go with the simple version here, which shows us exactly the entry point, which was quite interesting. And by the way, here in January, that was the 1, 2, 3, the count of 3, which we have seen here now, yeah, February, March, I said, and now since then the downswing has become more a sideways movement, and now the next upcycle swing is starting the important up leg now. So this is not by surprise, to be honest, not by surprise. I told you about that in January. So it's the same. You would now see validating that we are exactly there what we have been waiting for. That's the beauty of cycle analysis. So since we knew that once the top is in place, and we know this, everyone knows this, that the top in Bitcoin was there back in October 2021. That's nothing here. We needed to wait until the third repetition of the 200-day cycle has come to an end. This was between January, so 1, 2, 3, 4. That's exactly here, February, May, where this happened now. So this upswing now starting here has ruled out that we have moved up. So I would, and that's what you could expect now from that up move. So first, we need now to be careful in the December year-end period. We don't use cycles for fine-tuning, but we are now in the final up leg of that cycle here. So there's still time and room to continue, but that moving into early next year, that's where the downswing of that cycle comes into play. It could even be extended here if we add the 2 cycles, but then we talk about February of a possible downswing cycle projection. But as I said, now we have entered past the third repetition. And we saw this already here in that period here from July to August. So from here to here, now we have seen that this downward cycle timing now resulted in a sideways movement. So now it looks like we are more in a broadened upswing cycle, which means the upswings might be sharp, and then the next downswing cycle phase could just be another pause and then another strong up push. So that's how to read it. And I just wanted to update you on that reading and to fine tune now, being careful at this current upward momentum. We would always bring in our technical analysis, or you need to add technical analysis to your chart. One possible measure is, and what we often prefer here, you see it at the bottom of the chart, is the cyclic tuned RSI indicator, so a technical indicator tuned to the dominant cycle length. And by the way, you see this was the perfect situation from a timing. So cycle gives us the timing. And when this indicator crosses from below the lower band to the upside, this is then the technical entry. So we have the technical entry in the timing period here. And now the perfect situation would be that in this timing window here, so we could try to mark it on the chart. So this timing window is somewhere here. There is when we would, at the best case, would like to see maybe a crossing from below to the, so crossing down below the upper band. So then we have the confirmation. So you see now we have crossed above the upper band, and as long as we stay here, this is positive, so we can now play the momentum game. So the momentum is positive as long as we stay here. When this technical indicator turns down and crosses below the upper band, then I would not call it a sell signal, but then another pause could be seen. And Elliot, I see your question in the chat. Yes, I mean, we need to wait a little, but yes, this could then be the first out of 5 upswings. You refer to the pattern in Bitcoin. Correct, exactly correct. So this is what I would now look for, the expected 5 upswings we can, if the pattern continues, see within this 200-day cycle. To fine-tune that, use technical indicators. 20 minutes, quick and simple. But that's the beauty of cycle analysis. I mean, here it really shows that if you invest the time to understand the historical cycles in the asset you're really interested in. So, and I hope this example showed you that the 200-day cycle would not become visible if you just analyze current situation. because just the spectrum doesn't tell you anything for this short period of the last 3 days, because we just had a flat line in Bitcoin over a year now on a daily basis. So you cannot use the spectrum. As said, the downside, if you use more historical data in your cycle analysis, is that you get a better overlook about the possible length of the cycle. Yeah. So the more historical data, the better you are in detecting the cycle length. However, with the downside of not being able to have the current phase, yeah, because you need to phase, so the state, where are we in the 200-day cycle, to make an assumption what's the next leg of the 200-day cycle. So, and the more and more data you have, the worse is the phase projection. So that's the balance or the trade you need to do. Too much historical data, good for detecting the best length, but bad for detecting the current phase. And to do a projection, phase is as important as the length. Yeah, and with this knowledge, by just adding a little bit of historical data, you see, the 200-day cycle becomes visible. So yes, it's there yet. And maybe it has been diluted due to past year of non-movement in the data series. But it's still there. And to use it, we now can see that the first upward leg from the count of 5 seems to be in the final stage. And Elliot, I see also already in the chat, yeah, it would now really, really be profitable to look out for the 5th repetition of this upswing period. But I think there's some time to wait and observe. We still have some time before that will happen, Elliot. Okay, so yeah, Bitcoin, you often asked for. I mean, there's not more to tell. There's not more to talk about. As simple as that. I mean, most of the work was already done back ago. So please review the January video. And I think even a year ago, I made a video on this long-term pattern. So if you're not aware of that, watch it. It's worth it. And once you have this knowledge, then the cycle analysis even gets more easy on that. But that's the update. As said, nothing more to talk about. Long-term cycles, weekly cycles, I would not recommend doing on Bitcoin. We don't have enough historical data to validate weekly cycles on higher time frames. Let's take some time for your chat. It's a very short session, so there's not so much going on in the chat, but let me try to dedicate the time towards it. So GK, you asked the question in a prior video, you showed a paper written by another group that had developed a new trend indicator algorithm. Can you tell me where I can find that paper? Or yeah, it's about the we introduced that. Give me a moment to look it up before I tell something wrong here. Just a second. Yeah, it is called the running slope difference t-test. So, and this group is coming from weather or climate research group. And in climate data analysis, it's very important to identify important changes in trend, in the underlying trend. I mean, we are all observing the temperature changes in our global atmosphere, and we all need reliable data confirmation and mathematical algorithms which help us in identifying if there is a trend change ongoing. And the running slope difference test was developed by that group, so coming from a complete different area, so from climate data series. So they evolved a method of calculating slopes to the left and to the right. So assume a point in time. You can run a trend series slope to the past, or from that point to the left and to the right of the chart, and then you can compare if there's an ongoing trend, you would have a straight line upwards, downwards, or just a no trend. So the slope difference would be 0. If you have a change in trend, so to the left, to the left here. To the left, you have an uptrend, and to the right, you might have a downtrend. So this means you have a strong change in the slope to the left and to the right. So you can calculate at any given point how big the slope difference is, very simplified. And based on that exercise and that algorithm, you can evolve or detect important trend changes in the underlying data set. So it's an indicator which helps you confirming past trend changes. So it will not help to identify the next trend or the next trend change. So that's the difference using cycles. It will not help us to predict future trends. It will only help to detect trend changes in the past. So you can, from a cyclic perspective, you could use the detected changes in trend based on their method to confirm cycle phase alignments. So if the cycle turning dates in the past align with changes in trend from the running slope difference test, then you have an alignment of two different methods. So the running slope difference test, identifying trend changes in the past. If this aligns with the dominant cycle turns in the past, then you could use that cycle to do a projection, but not just the running slope difference test. I hope this was a short summary, but GK, please look out, use Google or ChatGPT or whatever, and search for running slope different test. I don't know the authors, but I'm sure you will find their paper with that comment. KZ and Elliot, yeah, you're asking about the when the fifth repetition. I mean, you could do, but I would not recommend to do now. But let's bring this chart up again, and I will maybe then also explain to our other followers what you're talking about with the fifth repetition and why this could become important. Give me a second to prepare the chart. So there are some questions in the chat which relate to the fifth repetition of that cycle. As said, the key pattern I talked about was 1, 2, 3 to identify the end of the down leg and the start of the next major upswing phase in Bitcoin. So that's why the 3 is important, and this is what we have seen now for the first time since that high. So as you see in the chat that some colleagues are asking for the time of the fifth repetition now in the future, we need to count 5 counts forward. So this, so 1, 2, 3. So now we have this is 1, 2, and we need to project this even more into the future. So 3. So in our cycle analyzer, we need to change the setting to plot into the future even more data points, so that that cycle just plots more into the future. I think maybe that's not enough what we see here, and then we can start to count that turning into the future. So now we have 1, 2, 3, 4. So I think we're talking about past maybe something in 2025 to happen, and that's why I said I'm really not now interested in when that will happen, because the nominal cycle with a length of 200 will vary until that point in time. So we will see changes in phase, and the phase will vary, the length will vary slightly. So we cannot really make a timing projection now for the fifth leg of that upswing. And even though we could, so you see here, we could plot it into the future, you should never do this, because 1 or 2 looking further into the future than just one repetition from a static cycle projection will be wrong anyhow. So this projection will be wrong if you go more into the future than just 1 or 2 cycle repetitions. But the general comment we could make here is, in the year of 2025, maybe we could see this major exponential next upswing. I would not expect it now. So I would not expect on short term that we will see that exponential move in Bitcoin again, which we have seen, I think, 3 times now, at special points. But we could prepare. We could prepare for that. Okay. So that's on Bitcoin. And your question, yeah, your January isn't available. Okay, so Elliot, you're referring to the, it was a session within the Foundation Financial Summit projections in 2023. It's a good question. I was thinking that this video was available. Give me also a second if I can find it just quickly. I was under the assumption it is there, but it should be for members. So for members, in any case, it needs to be there. Maybe it's not there for the public, so for non-members. But let me check if at least on our channel. Just a moment. Oh, I need to post a follow-up here. Where's the summit? Financial Summit. Yeah, it's a good question. It's not for the public. So, Elliot, your question is valid. The Foundation Financial Summit presentation seems not to be public open, but it should be there for every member. And I will promise to bring back this link here. But it looks like it is not there. Yeah, Elliot, thanks for the hint. I will promise to post the link to the January series here below in the YouTube section. I just need to research. Elliot, I think it is somewhere for members. Maybe it's not on the public YouTube search page available, and we need to check on the cycles.org website where the link to the video series is. So that's, I think that's what we need to make. I think it's not public searchable on the YouTube channel, but it should be at the cycles.org page available, at least for every member, regardless of which account you have. Yeah, Effa, maybe your question. So future line of demarcation, we have it in the Cycles application for the professional users, but we don't provide tutorials yet. So I would just recommend future line of demarcation. It's a Hurst principle, so it's nothing special of the Foundation. And there are lots of basic knowledge on how to use Hurst concept of FLD out there. So I would recommend first just search for public available knowledge on using FLDs. That's a good starting point. Leighton, I see you're looking for a simple video summary or a starting point to get it started. For members, if you asked our service crew, so Liz, if you reach out to Liz, our service team, via email, they can provide you an individual email recommendation which cycles to start. So Leighton, if you are a valid or an active member at the Foundation, please just send an email to our service team that they should send you some important links how to get started, and either Liz or Wes of our support team will send you some important links to key videos to start from. Okay, so I think that's it for today. I hope you liked at least the update on Bitcoin. And I will come back with a January video to make it available, at least for members. In any case, it's just to look up the link. So thanks for today. Send me in your questions, do your Bitcoin technical analysis. And I think we are now exactly in the point or the window we have been waiting for since January, the upswing of the third repetition now of the cycle, which is active here. Look out for the end of the year, and then we count the next swings upwards. Thanks for joining me. See you hopefully next week. Stay safe.